Hello everyone, I am Abinaya. I am studying second year in AC&RI curriculum. Today I am going to explain about the concept of caste. In this lesson, we are going to see about caste, types of caste curves, shutdown and break-even point. First, let us see about caste. Caste is a function of output. A farmer can increase farm income by two ways, that is, by increasing the production and by reducing the cost of production. In this lesson, our concentration is on how can a farmer increase his farm income by reducing the cost of production. So cost refers to the money value of effort extended or sacrifice made in producing an article or rendering a service. Now let us see about the definition of total cost. Money value of all inputs used in the production process is termed as total cost. Short run cost function. In the short run cost function, certain costs are fixed and others are variable. C is equal to f of y plus k. In long run cost function, all costs are variable, that is, nothing is fixed in long run cost function. C is equal to f of y. Now let us see about what is cash cost and non-cash cost. Cash cost means the resources are purchased and used immediately. Example, fertilizer, fuel and oil. Non-cash cost includes depreciation and the resources owned by the farmers. Example, tractor and buildings. Now let us see about explicit cost and implicit cost. Explicit costs occur when the company pays for the usage of its factors of production, and implicit costs occur when the company uses resources belonging to the owner such as capital and inventory. So alternately known as explicit cost is also referred to as out of pocket cost, and implicit cost is referred to as imputed or opportunity cost. So explicit cost can be determined easily and implicit cost does not have track and cannot be determined precisely. So there are 7 cost concepts. First, total cost. The total cost includes fixed cost and variable cost. Addition of fixed cost and variable cost gives total cost. Fixed cost. Fixed cost do not vary with the level of output. It is horizontal and parallel to x-axis. Variable cost. Variable cost vary with the level of output and it is inverse S-shaped. Next, let us see about average fixed cost. Average fixed cost is total fixed cost divided by output. And average variable cost. Average variable cost is equal to total variable cost divided by output. Average cost. Average cost is equal to total cost divided by y, or average cost is equal to average fixed cost plus average variable cost. And marginal cost. Marginal means addition. So marginal cost is equal to change in total cost divided by change in output. So in this graph we can see marginal cost, average total cost and average variable cost. So now let us see about relationship between average cost and marginal cost. So when average cost falls, marginal cost also falls, but MC is lower than AC. When average cost increase, MC also increase, but MC is higher than AC. Marginal cost will cut the average cost from below, that is point of equilibrium. In this graph, we can see the relationship between production curves and cost curves. When TPP is increasing, the cost curve is decreasing. Now let us see about opportunity cost. So opportunity cost, it recognizes the fact that every input has an alternative use. Opportunity cost is defined as returns that are sacrificed from the next best alternative activities. It is also known as real cost or alternate cost. So now let us see about shutdown and break-even points. So shutdown point is when the price is equal to ABC, that is, it is not able to cover the variable cost of its production. So in this condition, the firm should shut down. Break-even point is when the price is equal to average cost. When the firm is in break-even point, it receives a normal profit. In the break-even point, the price is equal to average cost. Now let us see about CACP, Commission on Agricultural Cost and Prices. So there are several cost concepts in CACP. So the cost A1 includes value of human labor, value of bullock power, value of machine power, value of seeds, value of manures and fertilizer, value of plant protection chemicals, value of weedicides, irrigation charges, land revenue and other charges, depreciation on farm implements and farm building, interest on working capital, other miscellaneous expenses. So the cost A2, it includes cost A1 plus rent paid for leased in land. Cost B1 is equal to cost A1 plus interest on the value of owned capital assets. Cost B2 is equal to cost B1 plus rental value of owned land and rent paid for leased in land. Cost C1 is equal to cost B1 plus imputed value of family labor, and cost C2 is equal to cost B2 plus imputed value of family labor. So income measures in relation to different cost concept. So now let us see several measures in relation to different cost concept. Farm business income is equal to gross return minus cost A1. Owned farm business income is equal to gross return minus cost A2. Family labor income is equal to gross return minus cost B2. Net income is equal to gross return minus cost C2, and farm investment income is equal to net income plus imputed rental value of owned interest on fixed capital. So now let us see the MCQs. So dash is the one in which certain costs are fixed. So answer is short run cost function. Dash is one in which all costs are variable. Long run cost function. So dash are incurred when resources are purchased and used immediately in the production process. That is cash cost. Example is fertilizer. Dash consists of depreciation and payment to the resources owned by the farmer. Non-cost cost. Example, buildings. Dash refers to fixed cost per unit output. Average fixed cost. Dash is defined as the change in total cost per unit increase in output. Marginal cost. So find out total fixed cost using the cost function of TC is equal to 100 plus 8y minus 0.4y2 plus 0.02y3. So we know that total fixed cost is always fixed. So in this it does not change with the value of output. So in this 100 is the total fixed cost. Option A, total fixed cost is equal to 100. Dash is defined as the returns that are sacrificed from the next best alternative activities, that is opportunity cost. Payments made by the entrepreneurs for purchasing and hiring of inputs and input services is called dash explicit cost. Dash refers to the money value of effort extended or sacrifice made in producing an article or rendering a service or achieving a specific purpose. Cost. Thank you.